In today's video, I'm going to teach you QuickBooks tips. Learn how to record and track owner contributions. If you've put your own money into the business, it's important to record it the right way in QuickBooks so your books stay accurate. Owner contributions are not sales income, and they also aren't loans unless you intend to treat them that way. Instead, they're typically tracked in an equity account, which helps you clearly separate business activity from personal funding. The first thing you'll want to do is create the correct account in your chart of accounts. Start by clicking the Settings icon, also known as the gear icon, and then choose Chart of Accounts. From there, click New in the top right corner. For the account type, select Equity. Then for the detail type, choose Owner's Equity. In the name field, enter Owner's Contribution and then click Save. This account will now be used to track money you personally put into the business. Next, let's record a cash deposit when you transfer money into the business bank account. Click the New button and select Bank Deposit. Make sure you choose the business bank account that actually received the funds. Then go down to the section called Add Funds to this deposit. In the account column, select the owner's contribution account you just created. After that, enter the amount of money you added and click Save and Close. This records the deposit properly without overstating your business income, which is a very common mistake for newer QuickBooks users. Now let's look at another situation. When you personally pay for a business expense using your own money instead of the business bank account. In that case, click New and select Journal Entry. On the first line, choose the appropriate expense account and enter the amount in the debit column. On the second line, choose Owner's Contribution and enter that same amount in the credit column. Then click Save and Close. This journal entry is important because it allows QuickBooks to recognize both sides of the transaction. It shows that the business had an expense, but that the expense was effectively funded by the owner. That way, your financial statements remain complete and your contribution balance stays up to date. As a general tip, try to be consistent with how you record owner funding so your reports are easier to understand later. Keeping these transactions separate from income and regular business expenses will give you a much clearer picture of how the business is performing. And that's how to record and track owner contributions in QuickBooks.